Okay, everyone, let's begin. Welcome to the second installment of our Climate and Affordability series with our partners, the City Sponge and the Waterfront Alliance, who are also here today. Really appreciate all the questions that we got in advance and all the energy that everybody has brought to these discussions. So thank you very much. As we start, Rafal, would you like to go to the next slide? We have a question for you. We would like you to name a cost in the chat that you felt in the last year that may be related to climate and how so. So drop it in the chat as I go ahead and introduce Carlos Martin and our speakers. Rafal, you can go ahead. Thank you so much. So today we're so excited to have Carlos Martin, Firas Saleh, Aaron Sturm, and Tess Williams in conversation. And we're going to start it off with Carlos, who's going to kick it off and give us a grounding in the connection between climate and affordability. Carlos Martin is a vice president for research and policy engagement at Resources for the Future, the oldest think tank devoted to environmental energy and climate economics and policy. He was recently the director of Remodeling Futures program at Harvard University's Joint Center for Housing Studies and the David M. Rubenstein Fellow at Brookings Metro. Dr. Martin previously led the Urban Institute's Built Environment practice, which is how we know him, leading all the research on energy efficiency, climate adaptation, environmental governance, the housing industry, and construction regulations. He also, and probably his biggest claim to fame, was the original evaluator of the Rebuild by Design Hurricane Sandy competition. So we have been working together for 12 years and just so happy to see you. And then I will be introducing the panelists after Carlos speaks. Nick and Tyler, do you have anything you want to add before we start? All right,
No, just
thank
thanks
you.
so much
So,
for everyone for being here, and thanks, Amy, for moderating.
okay, great. Everyone can shut off their cameras, and Carlos, it's all you.
Great. Thank you so much. And hopefully you all can see my slides. All right. So I'm getting the thumbs up. So let me go ahead and get started. It's always a pleasure to
I
do
don't
it.
see them. One second. Does everybody see them?
No.
Yeah, I don't see them.
Okay,
Can
I'm
you try
getting
again?
some thumbs up. Should I try? Let me just try this again. How
Now it's
about
coming.
now?
I see it coming. Perfect. Got it.
Right.
You're good.
Sorry for the technical glitch. Always a pleasure to do anything that Amy Chester asked me to and to support the visionary work that she's doing and that Rebuild by Design is doing. So let me start off just making sure that we understand that we're dealing with a couple of clear truisms as it comes to climate risks and costs. Those of us in the housing world have been talking about affordability questions for at least 30 years. And so certainly housing, transportation costs, energy costs, water bills, and insurance premiums have all been going up very recently. But some of these have had longer term realities. But the chain of climate change's effects and the possible adaptation actions that we are seeing are having a toll, and they're taking an increased toll. How do we know this? Because we're already seeing them. So, and today I'll talk a little bit more about specific actions that individual households can take and the effects of not taking those actions for those households. But everyone is affected in this, and New Yorkers especially are going to be seeing the brunt of this. A second point that I want to make up is to make sure that people don't understand that climate policy does not necessarily increase costs. Half-assed climate policy does increase costs. So if we're not thinking about affordability questions as we're devising climate policy, we will see some of these effects. And many of us are familiar with things like benefit cost analysis, but let me remind you that all of these questions are ultimately around questions of how we choose to define and monetize some of the effects. On that front, so much of our world and climate adaptation is focused on property values, and particularly on the upfront costs that are associated with making any changes and the short-term risks. That's certainly how insurers are thinking because they do policies from year to year. But these things are not accounting for the long-term risks that we're going to be seeing from climate. So at the end of the day, we continue to monetize these upfront costs and we don't think about how we're actually valuing the people's lives and how we value our neighbors in the transition. So I'll come back to some of these truths, but let me get through some just quick data as we're moving along. So I want to remind people again that housing has continuously been an affordability challenge over the last 30 years, in particular in places like New York, that for the past 100 years have been historically very challenged. New York currently ranks as the 77th most overall metro area in terms of worst burden, cost burden. About 41% of the total population of New Yorkers are paying at least 30% of their income in housing related costs. For owners, that's about 32%. For renters, it's over 50% of New Yorkers are cost burden when it comes just to the housing question. We're seeing that playing out in energy prices. My colleagues at our Resources for the Future have produced this chart looking around the range of state level changes that are occurring. Remember, energy is very localized and energy regulations tend to be very localized as well. So what we're seeing in some cases is that some costs tend to be going up, but in some places, but this is not necessarily true in every place. From 2020 to 2022, we saw a stark increase in the cost of power production. That's the questions of where the source, the renewable energy or natural gas. But most of that cost increase actually came from high global natural gas prices during the first years of the Russian and Ukrainian war, and not because of renewable energy installations. Overall, the longer-term trend is a reduction in the cost of production and the cost of transmission and distribution, that is going from whatever power plant to your homes, has what's been steadily increasing over time. And this trend is especially stark in regions of the country where electricity price increases have been the highest. So parts of the Northeast, parts of the Mid-Atlantic, California. In California, for instance, inflation adjusted distribution costs, getting the electricity to your home, have increased by 18% since 2021. And California has invested in enormous amounts, particularly in upgrading its distribution system because they needed to mitigate for wildfire risk. So a lot of the costs that we're looking at in terms of adaptation are actually being felt in other things like your energy bills and your water bills because they have to prepare those grids just as much as your home. Let me just wrap up very quickly on where we've seen the cost increases by talking about the obvious insurance increases that are on the rise nationally. In Kings County, for example, we know that homeowners are paying an average of almost $3,000 per year for insurance in 2024, and that was an increase of 26% since 2018. So homeowners that are on the high end in Kings County were paying almost $6,500 annually, and that was an increase of about 32%. Compare that to a place like the Bronx, Bronx County, where homeowners paid an average of also about $2,500 for insurance in 2024, and that was an increase of 18% from 2018. So insurance premiums are going across the country. So we've talked about housing, energy, and insurance bills going up. So all of these will, in fact, be affected by climate change. We know that in New York City in particular, 70% of housing units are in New York City's floodplain. 70% of those units that are in the floodplain are in multifamily buildings, and 90% of those buildings were built before 1983, and that was when new flood resistance standards were imposed in New York City. So those buildings are particularly vulnerable to flooding and at a risk of escalating flood insurance premiums. So let's talk a little bit about what happens with the climate change. What are the reactions for climate change's effects, particularly related to flood, and whether those actions and behaviors are affordable as well. So let's start at what happens after disaster, after a major flood event. So disasters, we know, lead to broad and often substantial negative impacts on household financial health. We've found evidence of negative impacts across most measures of financial health. That includes credit scores, debt and collections, bankruptcy, credit card debt, mortgage delinquency, and foreclosure. So all of these are affected by disasters. The negative effects of disasters not only are strong, but they even grow over time. So these are all these very important financial outcomes. So the slide that you're seeing looks particularly at Hurricane Sandy, where we saw about a 10-point decline in people's credit score overall for all the people affected by Sandy. But what's interesting is the medium-sized disasters, that's that black line you see on the bottom. So there are smaller scale disasters that don't necessarily get the public assistance, particularly from what we knew formerly as FEMA. There where if you don't get that assistance, your financial outcomes are going to be even worse. So in the case of medium-sized disasters, we saw a 21 point decline, almost 22-point decline in people's credit score across the whole population. And it shouldn't surprise you that people with different resources before the disaster are more affected by these shocks afterwards. 4 years after being hit by medium-sized disasters, we found that the average credit score fell by 29% for those with poor credit scores before the event. So that's the yellow line you see on the left. 17 points fell also for those with fair credit and 8% for those with good credit. So in our data, the average credit score in year 4 is a 585 credit score for people in our comparison group for medium-sized disasters with scores below 60 before the disaster. So if you think about the effect of a 29-point lower a push for those people, they could be pushed to the very poor credit score rating pretty quickly. Similarly, not just looking at credit scores, we also know that people living in communities of color hit by these medium-sized disasters experience an average 31-point credit score decline compared with just a 4-point decline for people in majority white communities. Overall, we find that living in an area affected by a natural disaster leads to increases in debt and collections and rates of bankruptcy in the years following a disaster. Particularly, the share of people with any debt and collections is 5 percentage points higher in the first year after disaster, and the effect rises to 10 percentage points by year 4. I should note that in all of these studies where I'm showing what happens after a disaster up to the 4th year, our data only went to the 4th year. And so it's very likely that people's continued financial outcome damages occurred even much longer than the 4 years that I'm talking about. I do want to note I talked about energy bills. I want to call out the gray line that you see on the left with utility payments following a natural disaster, given that the interest is in energy affordability as well as all of the climate affordability questions in this discussion. We looked at the effects of disasters on utility debt, and indeed, the fraction of people with any utility debt in collections is 2 percentage points higher in the first year after disaster, and the effect rises to 10 percentage points by year 4. So what do we know that people do in these cases before a disaster? Right, we know that you're massively affected and things get more unaffordable and your financial outcomes are worse after a disaster. So what can you do beforehand? One, of course, natural inclination is that you buy insurance. And I say you buy insurance if you can. I'm going to switch a bit and talk about a study. Much of the literature that we know has focused on insurance affordability. Can think about the demographics of the households that we're talking about and how they compare individual coverage against price and claims treatment, et cetera. So I'm going to turn to a study that I did in New Orleans in the post-Katrina era, where we talked to home buyers. This is from 2008 to 2018. And we certainly noted that there are reduced differences in income and race compared to the same quality of coverage. But higher income people can afford better coverage for their homeowners insurance policy compared to lower income people. In fact, higher income people were buying about $27,000 more of coverage, though they were only paying about $289 more for it. Similarly, households of color paid about $255 less for their homeowners insurance annually than their white households, comparable white households, but have a coverage limit that was $41,000 lower in coverage. So if your ability to buy more, you're obviously able to do that. Another option that people have beyond insurance is finding a less risky home. And certainly this is playing out in places like Connecticut, where there are now climate risk scoring tools that are available publicly. Zillow, we all know the story, removed its climate risk scoring recently for at the national level. Places like New York and New Jersey also have required disclosures for home buyers as well as renters. But let's talk a little bit about this. Does information actually matter? So again, the same study I did in New Orleans, and this is after Louisiana's massive reform of its property disclosure rules that turned the state into the gold standard of property disclosures when it comes to flood risks. So in Louisiana, you have to report about 12, I think it's up to 14 different things about your home's flood risks if you're putting it on the market to be sold by somebody else. But in our study, we found that only about half, 46% of home buyers did not consult the disclosure statements much or at all, despite this gold standard of flood disclosure. And there were clearly notable differences in information sources by income and house price. So higher income households tended to, and those who were purchasing higher priced homes that were over $200,000 at least, used the formal information, including property disclosures, to a much greater extent than lower income folks or folks who were buying lower valued properties. So this is not to say that information does not matter, but it must be understandable, especially to first time home buyers and first time renters, and it must be actionable. That means households with limited to no housing options can't really act on the risks that they're being exposed to because they have no other housing choice. So what else do people do when to prepare themselves for this, to not get into those financial outcomes after disaster? The final strategy is do something to the property that you're in, like do things physically to reduce likely damages. All of us have seen pictures in the Gulf of people's homes being elevated. There's waterproofing that can be done. In multifamily properties, moving mechanical equipment from the first floors of the basement to higher levels, etc. Yet, despite the growth of these services, home mitigation techniques remain largely untapped. And that's even with home buyers with higher levels of perception about risk and higher resources. So what we saw was the wide variety of people in Louisiana that we spoke to had done certainly a lot of the preparedness things, like having their documents all in one place, knowing what their evacuation routes were, etc. But a very limited number of people had actually done any physical actions to their homes, storm shutters, home elevation, etc. In fact, the only significant predictor of taking any mitigation action is the household's ability to pay. So yet again, we see those with housing options and those without, or as I like to say, the climate adaptation haves and the climate adaptation have-nots. So this leads us to start thinking about the people who can afford some of these changes in the midst of the fact that the cost of them are going up across a wide range of household expenditures. The image you see here is from a home improvement trade magazine I read, and it was part of a homeowner's documentary about his family's decision to elevate his home in Houston after Hurricane Harvey. What you see is the author's family on the original foundation slab that is literally being elevated while a Latino construction worker of unknown immigration status toils below. A visual depiction of our national housing climate stratification in convenient how-to form. There is a growing movement to use state funds, and in some cases local funds, to incentivize fortifications and home elevations. This is being seen in Alabama, Louisiana, Texas, and increasingly California. But with additional nuance of needing to provide that money up front so that, again, the person isn't having to pay that huge upfront cost and hoping that their insurance premiums get reduced later on. It's important to remember that we're talking about three different scales. Even though we're talking about individual households, all of these scales affect how a property is valued and what people can do and what their exposure is. These three scales are also, we have to think of them as decision-making levers, right? Which do you prioritize as a city? Who are you protecting at each of these scales? What combination of interventions can you do, either at the house, at the neighborhood, or at the regional level, that can provide the cheapest solution that is most effective and is least destructive in the short and long-term longevity of the residents who are already in there to make sure that they're keeping it out of harm's way. If I could offer solutions for our conversation, we should certainly think about prioritizing infrastructure, the regional infrastructure in vulnerable communities who don't have the resources to do household level solutions, advancing long-term affordability and wealth retention for those current residents through things like tax incremental financing, resilience districts, etc. Because we have to think about the unintended consequences. The green gentrification is real, and we have to bake affordability when we're making these long-term transitions. We should also think about filling the aid gap after disaster. You saw that slide down of people's financial status. Having a pot of money be available quickly can stop that decline at an earlier state and can likely reduce that decline in the long term. But we should also think about promoting social capital and programming, as well as the physical interventions that we're going to be talking about today. Because in the long term, my concern is that we're going to see a lot more privatized infrastructure, having your own private levy, which we think is an exaggeration, but there's a very real possibility it's occurring. In the United States, we're not particularly good at fixing things. And that certainly goes true for our housing institutions that were created in the 19th and 20th centuries and not built to address a 21st century problem. So let's have a conversation about how we move forward. I'm sorry if I've gone over time.
I don't think you have, but what you have done is made me want to go back to bed and put the pillow over my head because the problem seems so enormous. But I know that it's also an opportunity and an opportunity to rethink our neighborhoods and to have the infrastructure we want to enhance our neighborhoods, even on dry days. So I really appreciate that. As we asked the other panelists to turn on their camera, Carlos, I'm going to ask you a quick question that we got in the chat. The question is, what's an example of a medium-sized disaster? And how is the criteria determined?
Well, right now, that's a very big source of contention because clearly it's no surprise that the process has been politicized under the Trump administration, how a state declares the disaster and what goes up to the federal level for approval and in turn access to individual assistance funding as well as public assistance funding from FEMA. So medium-sized disaster is what we're seeing a lot more of. We've talked a lot about the high frequency events and high severity events, but the reality is what we're seeing is a lot of the tornadoes, winter storms, hailstorms in the Midwest, those things that maybe damage us like fewer than 20 homes sort of thing. But that create a localized disaster, but that don't get elevated to federal status. So when you don't get those things, don't get elevate to the public level assistance.
And I'll just remind everybody that FEMA declares disaster, actually the president declares a disaster declaration only for economic impact. So if you're talking about a small, medium, large disaster, we're talking about the economic impact. So storms like hurricanes have way more of an economic impact than a heat wave does, for instance, or even a localized tornado might have. So just to remind everybody. I'm going to introduce the the other panelists, which I'm so excited to join this discussion. So I'm going to read your bios and introduce you and then give you a chance to answer the question about how affordability and climate is showing up in your work. So the first one, Dr. Firas Saleh, is a director of model product management at Moody's, where he leads model product development and strategy for Moody's North America Flood and Wildlife Modeling Services. He holds a PhD in geosciences and natural resources from Sorbonne Universities in France and has a background in water resources engineering. Thank you for joining us. Aaron Sturm is currently the Deputy Director of Resiliency at the Center for New York City Neighborhoods. And thank you for being a very close partner with us on Rainproof New York City. He has an extensive leadership experience in housing consulting, disaster relief, and resiliency program management. He's worked at the development and implementation of the New York State Homeowners Assistance Fund, a federally funded program aimed at assisting homeowners affected by COVID-19. And Tess is the Deputy Director Tess Williams is Deputy Director of Housing Development at the Fifth Avenue Committee, a 45-year-old affordable housing nonprofit based in Brooklyn. And I have been watching the Fifth Avenue Committee do incredible work for actually many decades. Tess manages FACT's affordable housing development from pipeline through construction and operations. So very excited to have you all. Maybe we'll just go in that same order. Firas, do you want to start and talk about, share with the audience about how you're seeing climate and affordability show up in your work?
Thank you, Amy. And again, a pleasure to be on this panel. Very insightful presentation by Martin. I think you really set the stage nicely. I think today there's really no doubt that we're navigating a risk landscape that is constantly evolving, interconnected, and more complex than ever before, right? And today, when we think of it from Moody's perspective, from a modeling perspective, losses, and these losses could be, of course, economical losses or insured losses after a major disaster, or in certain cases, a smaller disaster, is really no longer driven by hazard frequency and severity only, right? And because there are so many other processes that are also relevant here, right? And I think one or two that are worth noting is, the exposure or the property growth in certain cases in risk-prone areas, right? Are we continuing to build, let's say, closer to the wildland urban interface? Are we continuing to build in flood-prone areas and so on? And how are these buildings today interacting with the built environment and an aging infrastructure, right? When you think of our levee system in the US, we have, over 50,000 miles of levees protecting over $2.3 trillion worth of exposure. So when a catastrophe event happens, right, then we start seeing the outcomes we saw after Hurricane Sandy in New York. We saw, of course, remnants of Hurricane Ida and impacts of rainfall. And of course, post-event dynamics also play a very important role, right? So what does it mean when you have the rising cost of reconstruction, social inflation, and so on? So all these different factors today, when we build these catastrophe models, we take into consideration and try to better understand and better model. The overall objective is really to, I would say, reduce that uncertainty, right? So when we build these models, we look into, for example, what is the climate change to date? How does sea level rise look like? What are the patterns when it comes to rainfall? And of course, one important element that we also look into is the insurance gap or underinsurance. So of course, a very big topic is the flood insurance gap. Of course, Martin mentioned that as well, right? Flood insurance, as you all know, is not a requirement when you get your standard homeowner policy. It doesn't have flood insurance, but if you happen to be in a flood zone or a FEMA flood zone, then you need to acquire flood insurance to get your mortgage. Now, the biggest challenge that we see in New York City, for example, is today the city has two maps when you think of it, right? You have the pre-Sandy flood insurance rate map, which dates back to 2007. And of course, you have the post-Sandy, and then that one was appealed and still sort of in construction, right? So today, if a homeowner wants to go buy a property, right, potentially they could be outside of that 2007 flood insurance rate map, which means they won't be required to get flood insurance. Effectively, they are self-insuring, right? Because if something happens, that property gets flooded, they're of course on the hook to pay for the losses and so on. So this is some of the dynamics we deal in the context of modeling. So trying to understand where is that insurance gap, how can we introduce into our models the current climate, future climate projections as well, and also incorporating mitigation strategies, right? So these models today have evolved as that risk landscape has evolved. So you can include, let's say now, New York City is investing in over $5 billion of, protection systems from flooding and so on. You can include those in the models. You can go and change first floor height of a specific property, let's say invested in mitigation. So you can change all these different elements, rerun the models, and try to better understand how does that mitigation reduce the risk profile at property level, at portfolio level, at different scales. Hopefully that answers a little bit your question, Amy.
Absolutely. Thank you. Super interesting. Aaron, do you want to jump in?
Yes, absolutely. Happy to be with everybody today. Let's see where to start. So just starting, so the Center for New York City Neighborhoods is focused on promoting and protecting affordable home ownership. So as far as how we see climate affecting affordability in New York, we see it absolutely exacerbating costs and especially impacting vulnerable communities unevenly. Just to say it another way, a home that's prone to flooding or overheating isn't truly affordable. So we talk about ways of conveying risk without um, scaring people off. I think we try to make it as approachable as possible, but I think there is a challenge in helping homeowners see how they can take action. Like it was just mentioned, the maps are still being contested. There's a lot of off ramps to just get disengaged with this topic. So we're trying to help pair funding for mitigation options so that folks can be proactive. There was a report came out last year by the First Street Foundation showing that homes that experience flooding are 40% more likely to experience foreclosure. So kind of seeing this as a foreclosure prevention, talking about mitigation, talking about ways to create an emergency fund savings. I mean, even if you do have flood insurance, the deductible can be anywhere from $1,000 to $10,000. So post recovery, you need funds to keep that going, to pay your deductible. And just also point out in Carlos's slide about the impact post Sandy, where most folks or a lot of folks have damaged their credit because they're relying on credit cards to recover. Homeowners insurance is tied to your credit score. So your homeowner's insurance, the worse your credit gets, your homeowner's insurance goes up. So there's like a compression of a lot of different factors. And if you don't have flood insurance, and then you rely on FEMA. I mean, the average payout for that is like 7,000, whereas flood insurance can pay out almost 68,000 or 70,000. And if you did rely on FEMA, you're going to have to get flood insurance down the road. So we absolutely see this as an affordability issue and helping to unpack the options and guide homeowners to resources is front and center. I'll stop there. I could keep going, but
Thank you, Aaron. Tess, do you want to jump in?
Sure. Thanks, Amy. There's been a lot of conversation, understandably, nationwide about climate and affordability as it relates to individual homeowners. But in New York City, 70% of households are renters, and 50% of those live in rent regulated or affordable rental units. And so when we talk about affordability and housing in New York City, we have to talk about this whole ecosystem that's frankly in crisis of affordable multifamily rental buildings. And these buildings are already, as I said, struggling. They're aging. They're often wildly energy inefficient. They're often in lower lying areas of the city due to redlining, decades ago. And so we see climate and affordability in two major ways in that world. The first and most obvious is in our monthly costs, whether it be insurance, whether it be electricity, whether it be water. All of those costs are going up, and all of those costs are linked to climate change in a whole wide variety of ways. And the other major thing we see is the cost associated with retrofitting those aging buildings with energy efficiency measures. There's a lot of well-meaning legislature in New York State and city aimed at electrifying and modifying aging buildings to make them more efficient, but that has to be paid for in some way, and those projects are expensive and complicated, and affect the overall health of the affordable housing community.
Thank you all. I want to go back to something Carlos said because I thought it was really provocative and maybe even a little depressing. Carlos posed that question of, does information really matter? I mean, we are all in the kind of, what we do for a living is give people more and more information so they can change their habits and protect themselves. I'm curious how that is showing up in others' work and if you're hopefully seeing something different.
Happy to maybe just share some high-level insights, right? I think information is key. More accurate information is very important, right? Because you really can't, I would say, you can't manage what you can't measure or you can't quantify. And I think this is the biggest challenge, which is if I don't know today that my property is at risk, what would it mean if something happens? Because, I think there's a good question from the audience earlier, right? And when I think of it, right, I think the most expensive hazard is it's not always the one I would say with the biggest or the largest damage, right? We can remember Sandy or other events, but it's really the hazard with the weakest financial shock absorber, right? Which is in this case insurance, right? So how do I know if I'm underinsured, right? How do I know if I don't have insurance for this specific peril? And how do I know if I need it or not? And I think this is where it comes back to what information is available for let's say, for the consumer to make an informed decision about their risk, right? And we see it also, of course, from the lens of insurance companies, portfolio managers, even banks, right? There's a lot of emphasis on trying to understand how is the risk evolving beyond, let's say, these binary maps or beyond binary, let's say, wildfire or flood or any other perils such as severe convective storm. So I think that's a very important aspect. I think another good example, right after Sandy, we really have today a good understanding of coastal storm surge when you look at New York City, right? There was a lot of analysis that is done on storm surge. But again, when it comes to flooding, you have the mechanism of pluvial flooding, right? So this is one where, there needs to be potentially more and more understanding for consumers because they could be way inland, but they could be potentially exposed to flooding because pluvial flooding or urban flooding is a very complex sub-peril because pluvial peril is unconfined, so it can rain anywhere, right? As you saw during Ida, could be inland. When we look at, for example, through the lens of our databases, we see that, for example, less than 5% of homeowners in inland areas of New York have flood insurance, right? That's a number where if something happens, of course, these homeowners will have to be on the hook to pay out of pocket or going back to Carlos' presentation, take credit cards or loans and so on. So this is how interconnected it is when you think of it.
Anyone want to add to that on information?
I would just
Yeah.
add that.
Oh, go ahead.
Go ahead, Tess. No,
I was just going to say that in our world, the residents in question don't have a lot of control over where they live or what happens in where they live. So we're not talking about information directly to households. Where our information gathering and educating is most important is actually at the policy level. And Carlos mentioned that, bad policy is what adds to cost. And so the better we can make sure that these climate laws are written or climate regulations are written, the better off everyone is. And that's all goes back to the information available.
Aaron, do you want to jump in?
I was just going to add the kind of more nuanced point of just we talk about the scale of the damage that could be caused, and then the cost of mitigating, adding flood vents to a home or whatever that intervention is. But as far as quantifying, like avoiding harm, pain, and loss because of those interventions, I think telling that story goes unnoticed because the lack of damage is quiet. And I think that's a piece that could use some amplification or quantification.
Very interesting. In the past couple of years, there's been this big debate in New York, and I'm sure it's happening in other cities, about whether or not we should be building new housing, and specifically new affordable housing in flood zones. And our city is still continuing to do that without investing in the infrastructure to make sure that the whole community is safe. However, I also know that we really need affordable housing and we really need to be building it anywhere we can. So I'm just going to kick this over to Tess and Aaron to start, maybe Tess and then Aaron. Can you help us try and figure out, how should we address this problem?
You are right, and it goes back to a long history of putting affordable housing in less desirable places. I do think that New York City has done a lot to, post Sandy, to shore up our coastline. But it's an ongoing problem. And I would say that we still need affordable housing wherever we can put it. And unfortunately, we need to usually put it on city-owned land or affordable land. And so part of what we're doing is making sure that individual projects are as resilient as they possibly can be. Moving important infrastructure above the ground floor, for example, small measures like bioswales and storm detention tanks that we're putting into our buildings, and that's what we can do on the individual level, and then again it goes back to political advocacy.
I wish I had more to add to Tess's answer. I really don't. So yeah.
Carlos, what have you been seeing nationally?
Yeah, I mean that I definitely want to weigh in on this only because this is a real tension that I think I have as being both an environmentalist and a houser, is that I see we're not going to have good environmental outcomes if everybody's homeless, if we don't have enough housing, if nobody can afford their housing. So we have to choose and this is what I was really talking about. We only talk about monetizing costs and benefits, but we need to talk about what we value. And the reality is, if you look at the rebuild by design examples, for example, it was a requirement that low and moderate income households had to be served by these major infrastructure questions, right? Like the big U came out not because we were protecting Wall Street and the Battery Park, we were protecting public housing on the Lower East Side, right? So we need more housing. The reality is it does cost more to do very effective climate adaptation, but if that's something we value, then we have to put our money where our mouth is.
I just want to remind everybody to put questions and answers in the chat. Sorry, in the Q&A button on the chat, if you want to tell us how you're seeing affordability and climate showing up in your household, please do. And I'm going to ask a question of the panelists at the same time that I'll also ask the people in the audience to let us know in the chat. And that is, Mayor Mamdani is brand new in New York. As far as we can tell, he doesn't have a really deep experience in the connections between affordability and climate, although he obviously knows affordability really well. What's the first thing that he should know? What advice would you give him starting a new job and has 4 years to kind of prove to New York City whether or not he deserves to have the job another 4 years? Who wants to go first? For us, should I call on you?
Yeah, happy. I mean, of course, I could maybe share some insight. I think, sort of maybe, I'm sure he's looking into, for example, the flood challenges, right? So maybe better, looking into how, let's say, flood mitigation is enhancing, for example, affordability, right? I think we mentioned the big U, right? And these flood resiliency projects. Well, there's also significant, I would say, benefits of, let's say, green infrastructure, these, bio-engineered gardens, like some of these localized projects that could, of course, that are not going to mitigate against something like Sandy, but potentially could absorb smaller quantities of rainfall and so on. So that's one example. I think, again, that's where models could be very beneficial, because models today, of course, allow to incorporate a lot of these mitigation strategies, allows us to understand, well, if I do this, then what would that mean for my risk profile, not only from the hazard perspective, but potentially for insurance accessibility, right? Because if there's a specific neighborhood that was historically perceived as high risk, but now that neighborhood is protected by a levee or some structure or some sort of resilience project, then what would it mean now from an affordability perspective, from an insurance premium and so on? So I think these are some of the elements that could be very beneficial.
One of the goals of the Hurricane Sandy Rebuild by Design projects, which we're seeing in Lower Manhattan and in Hoboken, is that as they come online, the government is petitioning FEMA to take that area out of the flood zone. And that is going to save a lot of dollars in individual pockets.
Exactly.
Tess, can we go to you next? What would you like to tell the mayor?
The first thing I would tell the mayor is to put the right people in the right positions, and I think he's actually already doing a great job of that. We are feeling hopeful, which is sort of an unusual feeling in today's world about where HPD is at as a partner to the affordable housing development community right now. But the biggest thing is the rising costs. The rising costs of insurance is up 110% since 2017 in the affordable housing world, which is just unsustainable. Utility costs are up as well. And I think, if he can focus on that, on shoring up the existing affordable housing infrastructure, then he can focus on the innovative, exciting ideas afterwards. But he has to get the basics under control, I think.
Aaron and Carlos, what advice do you have for the mayor?
Wow. Yeah, climate and housing policy must be intertwined. Equity should be kept central, and delayed action on climate initiatives, I think it leads to the most expensive option, which is recovery. Yeah.
Might you be talking about the state at the moment?
Okay.
Do you want to explain to everyone what's happening at the state, what's currently happening?
No, I'm sorry. Go ahead, Amy.
Oh no, okay.
What is it? What
Sounds
is it
good.
you're prompting? Yeah.
We were talking about the CLCPA legislation because you were talking about delay, and the governor is talking about delaying the implementation of this legislation, but that could be a coincidence. Carlos?
Yeah, I mean, part of the challenge is in New York City, there are decisions that are made in climate adaptation policy and federal and hazard mitigation that are made at the state level, particularly with the insurance commissioner, and at the federal level. So, what's the old phrase? A good mayor borrows from other cities, a great mayor steals from other cities. So, looking at the examples from places across the country that have used a wide range of funding sources to think about filling the gaps. So right now there is a gap at the federal level and in some cases the state level in some of the responses, some of the offerings that are being provided. So looking at some of those gaps and how the mayor can use his bully pulpit to bring in the financial resources, particularly for that immediate post-disaster financial hit, and then thinking about how we can start supporting the long-term benefits and making sure the insurers are accounting for the premium reductions by people making these decisions about the regional and the property level mitigation actions that they're taking.
There's a couple of questions that kind of build on that, Carlos, and maybe it's for us, but there's this question about parametric insurance, about whether or not that's a good way for a municipality to go. But there's also questions about whether the city should be investing in citywide community infrastructure, or whether the homeowners should be investing in their home, which one is more cost effective. And I would say we need to be doing both, but curious on the financial modeling for us. What are you seeing? What are you seeing, and what do you look at?
I agree. I think success, I would say, is interconnected here, right? Because you think at the what the way we look at it from a modeling perspective, right? We look at the property level, let's say, and try to understand, well, what mitigation is happening. Does it have a basement? Does it have first floor height? What are different, let's say, mitigation that are happening at that property? What's the roof age? So there's a lot of local characteristics that go into the modeling. And then, of course, there's the element of, well, if you think of what is the stormwater design in that specific city. I remember what happened during Ida. We had over 3 inches of rainfall within 1 hour, or 6 inches of rainfall within 2 to 3 hours, right? Our stormwater design storm in New York is maybe 1.7 inches or so, so double of that, right? So what does that mean, right, in terms of flash flooding. So these are, I would say, interconnected factors when you think of risk. Of course, as we're advancing these models more and more, when I talk about property level granularity, this is not something we were able to do maybe 10, 15 years ago, right? So there was no computational power. The models were not advanced enough, right? But today, the models are advancing significantly. We're seeing more and more innovative solutions because, again, these challenges are always, I would say, catalysts for innovation, right? So parametric insurance, I think, is a very good one, a very good example, right? Which is I think the benefit of parametric insurance is you have a trigger. If the specific event meets that trigger, then these funds are allocated, right? And then they are unlock very fast, right? As compared to maybe, a traditional approach, which could take weeks, or in certain cases, disaster resistance, which could take longer. So that access to capital is very important. And I think parametric insurance, empowered by some of these advances in modeling, is going to be really key.
And Aaron, am I correct that the Center for New York City Neighborhoods has a collaboration with New York City helping homeowners get what's essentially parametric insurance? Can you talk about that?
We did have some funding in partnership with Wharton. It was funding through the National Science Foundation. Actually, Carlos was a partner on that. But that is no longer in effect. Sorry, I don't know if you can hear that background. Yeah, so we scaled up, we purchased the policy. There wasn't a triggering event, but it was interesting to learn how we would roll that type of funding out should there have been a triggering event. But there wasn't. I think we tabled the idea of extending it another couple of years and decided not to move forward with that.
Are there other cities, Carlos, or places that you've seen insurance being used in a creative way?
Yeah, so California, shouldn't surprise anybody, is doing some really interesting experiments. And this is also with Carolyn Kuski, who was involved, who created the project that Aaron was mentioning and Amy referred to in New York City. We would argue that not only does insurance benefit households when it's parametric, that is paid off right at the moment, because again, you'll avoid that decline, that slide, but also public assistance should be immediately triggered. If there's a triggering event, people shouldn't have to apply and wait 3, in some cases, up to 4 years to get assistance. At that point, they're already out of their house. They already have no place to live, right? So we've argued that FEMA individual assistance should be, as soon as it's triggered, should send checks to people. We know that government can do this. We saw this happening during the COVID era, where the government sent checks to people, told apartment owners to hold off on evicting their tenants so that they could benefit from those resources too. We have to start thinking of climate risk in the same way we think of things like COVID risk.
Sorry, hit that by accident. Very interesting example about giving the checks over. Yeah, it would be interesting to see if anybody picks up that idea. We've gotten a couple of questions about using renewables or electrification of the grid. And obviously that could save money to the homeowner or potentially the city in itself. I'm curious if you're seeing any great projects around the country that we should be looking to.
We can even go outside of the United States, right?
You can go, yes.
And I bring that only up because we just got the autopsy on the Spanish blackout from last year, right? That noted that every anti-renewable energy person was saying, oh, it's because Spain is too heavily reliant on wind and solar for its energy, and that's why the country had experienced that massive blackout. And we now know from the autopsy that had nothing to do with it. That an increase in renewables can actually help prepare you for, particularly if decentralized off-grid, is going to help you prepare, and it's going to reduce your energy bills in the long term, but it's also going to help you prepare for these climate events more effectively. So I wouldn't weigh in on state policy, but clearly what's happening on the decarbonization questions and potential rescission of a lot of the New York State climate aggressiveness is concerning in that sense.
Anybody else want to add? Another thing we saw in the questions is about people are interested in how can we make sure that today's investments are valid over time. And I think that's a question about the modeling. And we started Rebuild by Design now 13 years ago. Our 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 communities were kind of in this frozen place where we knew that climate was an issue, but we were arguing over whether it's 2 degrees or 3 degrees or 4 degrees or what it means. And luckily, places like New York have jumped over that issue by having their own flood maps and being able to talk about it and working with scientists exactly about what's going to be effective in New York City. And not every city has that information. But does somebody want to talk to how we can be sure that our investments now will pay back over time?
I think
For
from
us, maybe
the
you
lens
in
of the
terms of
model,
the,
of course, right? Like
yeah,
when we think of, let's say resilience projects and how, let's say, what is it gonna look like in 2050? When we build these models, right, we look into the current built environment, right? But we also look into how is, for example, future projections of a changing climate could be like under different emission scenarios, RCP 8.5. I don't want to go into technical details, but we look into all these projections. I think when I visited the some of these resiliency projects on the East River, I saw that these floodgates were built to a sea level rise of 2050, sandy plus 2 feet of freeboard or so on, right? So when you look at it and you put it in the lens of these models, you can see that this level of protection is not only about protecting against something like sandy, but against sandy with future, let's say, conditions of sea level rise and so on, right? So these are things, again, you can do through the lens of these models. The way we run them, we don't run, let's say, only historical events. We run what we call probabilistic models. So hundreds of thousands of simulations to understand where is the tail risk, how is that potentially reduced as you incorporate these structures and so on. So I think this is where you see more and more of the value of the modeling when it comes to planning and I would say future resilience, not only for today's climate, but for a future climate.
And can I just add quickly? I
something.
mean, part of the
Yeah.
challenge is making sure that these things can handle future climate exposures, but it's also future demographic changes and future maintenance. I mean, this is the big problem in the infrastructure finance world is that we don't pay for maintenance well. So I just came from a Norfolk, Virginia site where that had a national disaster resilience competition funding that came out of was built out the Rebuild by Design, where they actually regret doing the bioswales and the water retention parks because they get filled with trash, and then the residents are stuck with having to deal with the trash. We don't think about the physical reality of maintaining and the demographic changes that occur in these communities while we're thinking about climate exposure. So I think if there's a funder watching this, please give Rebuild by Design a big chunk of change to have a conference around this, because clearly we don't have enough time to go through all the questions.
No, this is a huge issue, and I just want to actually have a call out for Illinois, who have changed the definition of capital to include parts of maintenance, and every state should do that. It should be high on what New York State does. New York City can't do it alone. We need the state, we need other states to also do that, because if like the green infrastructure as designed and implemented does not work unless it's maintained. And we know that. So it's got to be part of that capital funding. So we're at time now, but maybe I'll just ask everybody really quick round of what's the one thing that you're hopeful for? Who wants to go first? All right, I'll tell you what I'm hopeful for. Honestly, I'm hopeful for these really good conversations. This is our second, but we're seeing these conversations happening all over. And I am really excited about the new administration in New York City and think that we have an open ear and a chance to do things a little bit differently. Who wants to go next?
I'll jump in. We are finally having a different kind of conversation in New York City about the resiliency of communities wholesale. We're talking about, things like cooling centers and planting more trees and bioswales and, the air and water quality that residents are experiencing. And it's a great conversation. It's a different and sort of interconnected conversation about climate and culture in the city.
Just let me echo Tess's comment. I feel like the community groups that I'm seeing have playing out nationally. I mean, it was the climate justice community groups that have really pushed the environmental justice community
Mhm.
to be that much more aggressive, that much more familiar with the science and knowledge than they had in the past. And so I'm heartened by that, and that gives me hope. But I'm also given hope by the community leaders who are there's some creative people out there doing some fascinating things with cooling shelters, like making them a community fair during a heat wave, right? So it's not just an empty high school gym where people are sitting around like just in cool
Oh,
air.
that's
Like actually use that as an organizing tool. People who are creative like that. Tanika Lewis Johnson in Chicago, who's using mapping techniques in One MacArthur Genius to deal with changing housing segregation. I mean, rely on the creatives in your community.
Maybe quickly, I can just add some. I think that all these comments are super helpful, but I'm very hopeful because I think, the way we understand the risk is maturing, right? And we, through the lens of data and models and tools, we're able now to not only understand better how to manage risk, but also how to, for example, have more accessibility to insurance, more affordability, right? Where should we enhance infrastructure and so on? So I think that's key in terms of future resilience.
I'd also add that
Aaron, you want to have a
I'm
last word?
hopeful. Yeah, I'm hopeful by these conversations, and also that there are slowly some more resources coming online to help homeowners to some flood mitigation options. So thank you for this discussion today.
Thank you. Big thanks to Carlos and Tess for us and Aaron. A big thanks to our sponsor, which is Con Edison, and to Nick and Tyler from the City Sponge and the Waterfront Alliance. We could not do these events without the incredible community that we are a part of. So thank you very much. And we'll be announcing our next one very soon. Have a great rest of the day, everyone.
Thank you.
Thank
Thanks
you,
all.
Andy.